Hi folks, in today's video I have got my Trading 212 and Vanguard Portfolio update for you. I cannot believe it is May already. The year is flying by. We are coming out of lockdown. There are reasons to be excited. There are reasons to be optimistic. So hopefully the portfolio is going to reflect that this month. Of course, I am David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, passive income, frugal living, generally trying to make your money work as hard as possible for you. Subscribe if that is something you are interested in. Before we get started folks, I want to make clear and make plain that I am not a financial advisor. I am not professionally qualified to talk about any of this stuff in the video. In saying that, I am posting my videos up about my portfolio so that maybe some people can get some ideas, some people can learn from my mistakes, some people can just have a good nosy about to see what way I'm handling my business. So if that kind of content and that sort of thing is useful to you, please make sure you smash that like button before you go today. Let's just get straight into the video. Of course, the big news from my point of view this year was that I was ditching Vanguard for at least 1 year to try out Trading 212's ISA platform for this particular tax year. And as you can see there at 1856, we are off to a half decent start. So basically what I was going to do with Trading 212 this year was just invest in the products that I was investing in Vanguard in the main and sprinkle in a few other choices as we go. I still want the bulk of my holdings to be based around ETFs and index funds, but there is always going to be room for me to pick individual companies who I believe in or who I am using or who I think are going to have a good time of it over the medium to long term future. So with that in mind, I wanted to focus my portfolio for my Trading 212 ISA around two main pies. And the two pies that I have constructed here are the future industry, which is currently made up of iShares Global Clean Energy ETF and iShares Electric Vehicle ETF and VanEck Vector's Video Gaming ETF. These are all things that I think are going to be big business going forward in the future, and so I've lumped them together into a nice convenient pie. The good bit about these pies is that when you allocate some money to this particular pie, it's going to spread the money that you allocate across the three, in this case the three companies that I have in this pie. It'll do that by default, but you don't have to. You can still over allocate to one particular sector. You're not bound by your pie. It's not a hard and fast rule that you have to make every slice the same size each time. If you're interested in pies, I do have another video about that where I go into more detail. I'll leave that a link in the description below and just up here on a little card. Anyways, this particular pie isn't doing particularly well after 1 month, but it's really nothing to worry about. This is a long-term game after all. iShares Global Clean Energy is down 1.5%. Something similar for the iShares Electric Vehicle, and the VanEck Vector's Video Gaming ETF is up around about 0.6%. So that's dead on, no problems. So going back to the main event of this particular ISA portfolio, and that is the Vanguard ETFs. So the holdings in this one are Vanguard's S&P 500 at 35%, the FTSE Developed World at 35%, the FTSE 100 Index at around 10%, the Vanguard FTSE All World High Dividend Yield at around 10%, and the FTSE Emerging Markets at around 10% as well. This is going to form the bulk of my ISA this year going forward, and as you can see, right now the whole account is worth about 1,856 quid. So of course there are two parts to my Trading 212 account. In the invest account, which is where all my action was happening in the past year and a half or so, we are sitting with an account value of around 7,327 there. So there is a little bit of activity still to cover off that happened prior to the new tax year starting. The big news is that I finally got rid of Luckin Coffee. It was finally sold for about £24.60, representing a loss of about £69.30. That is by far the biggest loss I have incurred in this particular account, but have you ever seen that scene in Superman where he gets so angry he can't go to a party or something like that, and he takes away American football and he punts it into orbit? Fantastic. That's what I felt like when I was getting rid of this. I have hummed and had about getting rid of Luckin Coffee ever since the day I bought it. So we will link back to that video as well. You can go and check out when I was full of more optimistic feelings about this particular company, but honestly it's been languishing in my portfolio for a long time, and the capital I honestly think could have been deployed somewhere else. So we're drawing a line under that one. Luckin Coffee, goodbye, lessons learned, we move on. Dividends were pretty good this month, £8.28 from GSK. I got £4.13 from Coca-Cola, £4.66 from Trig, and £2.75 for an AstraZeneca free share that I didn't own for very long, but it happened to be in my portfolio at the time when the ex-dividend date came around. So it's been sold. I got a bonus £2.75 out of it. Happy days. And that's it really. I haven't been buying anything in this particular invest account because obviously now with the ISA up and going, I've been focusing all my money towards it. So you can see the ISA utilization there is at 9%, which isn't a bad start to the year. However, it might be useful just to take a quick run through the invest account to see what holdings I've got. So we'll start at the top and work our way down. Amazon have seen a bit of a bounce this month, so they are up, looking pretty good for me at £17.63. Again, you know, I comment on this most times, but the biggest thing here for me that hurts is the Forex impact. So while I have gained around £227 in my investment so far, £77.31 has been chopped off it because of foreign exchange. So it's something to think about if you're investing in companies that aren't based in your home currency, if you like. You're at the mercy of Forex rates. There's really nothing you can do about that. Avast are the cybersecurity company, and they've seen a little bit of an uptick again since we last looked at this portfolio. I would consider adding to Avast in my ISA. We'll let that one sit for a while. Coca-Cola again has seen a bit of a rise. We're now up for 7% there, and they're still paying a half decent dividend. GSK, they're sitting on shaky ground at the moment. I honestly considered selling these for a little while, but I'm going to hold on to them. The next few months are going to be very interesting. iShares electric vehicle, as you can see, already existed in my invest portfolio before I bought it for my ISA, and we are sitting at nearly a healthy 10% front in this particular account. iShares Global Clean Energy as well. I've got 73 shares in that one. Looking pretty healthy at 16.5% front. Legal & General, 203 shares, doing better than I expected. Happy days, this is what we want. Microsoft still looking strong. National Grid, one of the most boring stocks money can buy, but they pay a fairly solid dividend and they're a fairly stable stock. Definitely an income stock. If that's your kind of thing, I would suggest you give these guys a bit of a look. Palantir are down, still down for me around the 10% mark. I really think these guys could be doing something pretty spectacular with data and the product that they've got. This is a long-term hold for me. I would still be keen to add to my position while the prices are at this rate. Persimmon are the house builders. We might finally be seeing an uptick for these guys after waiting for over a year. I feel like I really need to hold on to them now to see if this infrastructure boom that we've all been promised starts to take off. These guys should be getting a good chunk of it. Trig is the renewable infrastructures group, another one that pays a half decent dividend, normally a fairly solid company in terms of price volatility, so I will hold on to these guys. Unilever, I think, features in pretty much every UK based portfolio there is going. It's a household name. You're going to have lots and lots of products in your house, and generally one of these stocks for all seasons as far as I'm concerned. Van Eck Vector's semiconductor ETF was an interesting one. Their parts are going to be used in lots and lots of different electronic devices. I think this kind of ETF has a good future, and it's a good one to get into for me personally at this particular stage. And finally, Van Eck Vector's video gaming ETF. I've talked about esports and gaming on this channel lots. I'll leave a little link to a video I have on that before if you're interested in watching that. So if seeing how I have invested my money has brought you any value at all, please remember to smash that like button. It will help this channel immensely. So you can see there on the little graphic the total deposits that I have made personally to my Trading 212 accounts across the board are just over £7,000 at 7,026. Total free shares have made a significant contribution, and for everybody who has been using my link, thank you very much. Trading 212 unfortunately are still not accepting new customers, but they have assured me they do have an active queue. So if you are interested in getting started with Trading 212, please use my link to sign up below. You will be placed in the queue, and eventually when your turn comes around to get registered, you will get a free share up to the value of £100. Total dividends now sitting at over £140. And the paper profit, if you include the free shares, is up over £2,000, around about 30% return on investment for the amount of money that I have put in. And if you want to exclude those free shares, well, the rate of return drops down to about 11%. I'm still pretty happy with that. If I could make 10% every year on my investments, I would be absolutely delighted. So let's just jump across to Vanguard now to have a look at what's happening over there. Okie dokie, so here we are in my Vanguard portfolio. There isn't a huge amount to update you on here. Obviously, I haven't been making any payments into this. This is going to kind of sit here for a year, but it's worth just looking at what we've got going on as well as what we have in Trading 212. So it's the same kind of pie that I have called Vanguard pies. It's very close to what we have going on in Trading 212, except the weightings were ever so slightly different, but it is the same ETFs. It's the emerging markets, it's the FTSE 100, It's the All World High Dividend Yield, it's the Developed World ETF, and it's an S&P 500. So all these guys are doing pretty well for me, you would have to say, at this particular point in time. This cash holding here is what's being paid out as dividends. It's not being automatically reinvested. What I will be doing is withdrawing from this particular account and bunging it into my Trading 212 ISA from sort of this point going forward. Just to have a quick look at where we were this time last month. So on the 1st of April, you can see here it was at 16,053. We're now at 16,600, so about £550 of an increase. This particular month, despite not having deposited any more money, that's just the markets working for me. That's just me being patient and leaving my money lying about. So all things being equal, this account will continue to grow, hopefully over the next 12 months as we come out of lockdown. There is a risk that an awful lot of money has been piled into the markets in the last 12 months to put the prices really at something a little bit unsustainable, but I'm not really interested too much in that. I am a long-term investor. I like my investments to be consistent and kind of oblivious to what's going on in the real world. That's my strategy for the next 10, 15 years. Hopefully it'll all pan out, and my Vanguard account here can play its part in getting me to that £100,000 goal. A quick scout at the insights will tell me exactly where all my money is being invested at the moment, and you can see it's quite heavily in North America. That's because an awful lot of my companies that I'm investing in are doubled up on because of the S&P 500 and the developed world. So you can see something like Apple, Microsoft, Amazon, they all hold quite high percentages, relatively speaking, in my portfolio. The sector allocation is a little bit better spread, but is quite heavily weighted towards industrials at the moment. But over the past 3 months, you can see we have seen something of a resurgence in the markets, and 9% return for the last 3 months is pretty healthy. I don't claim to be doing anything fancy here. I am just investing in ETFs and in the funds that Vanguard are offering. It's a fairly brainless way to invest, but you'd have to say at this point it looks quite effective. So let me know in the comments below how you like to invest. Do you use index trackers and ETFs, or do you like to pick your own individual stocks as you go? So that's really it for the Vanguard update. Let's get back onto the big screen. So there we have it. We are over a quarter of the way towards the £100,000 goal. Let me know what you think of my portfolio in the comments below, good or bad. Let me know what you're investing in, folks. And as always, thank you very much for watching. I will see you in the next one.